Nicholas Yeo, he's head of China and Hong Kong equities at Aberdeen Asset Management. So, caution, watchword, why?
Well, I mean, the market has been pretty positive so far, and mainly on the back of possibly a looser monetary policy. But I would like to caution on that because I think the inflation data may seem quite benign, but I think the real inflation is still, the risk is still out there.
Because the uplift last year we saw in inflation was actually around about this time, so the base effects actually, do the flatter to deceive.
Yeah, but if you really spend, I mean, if you're on the ground and spending on a day-to-day basis, I think things are not cheap in China nowadays in general. I think there's still that concern that there's too much money sloshing around in China's system, and I think there's still that concern at the back of the government's mind that more should be done to rein in some of this liquidity in the system. So I don't think that, I know there's a bit of a hoo-ha about maybe liquidity will be released from now on, given the last few statements by the central bank, but I think there's still a lot of uncertainties with regards to inflation. So monetary policy may remain pretty tight.
Okay, that's the economy. What about the state of corporate China? Our markets reporter David Inglis has been telling me 386 companies have reported their earnings in the last 20 hours or thereabouts. Now, 60% have missed estimates, actually.
Yes, I think it was a pretty tough year for a lot of the Chinese companies. Of course, it differs from sector to sector. I mean, if you talk about consumer sector, is still not too bad, but if you're talking about sectors that are more exposed to the external world, meaning exports to the rest of the world, especially to the West, that remains fairly disappointing so far. I mean, that's something that is not so robust yet. We're not seeing enough data. I mean, we have some technology stocks as well that we own. They are still going through a recovery phase, so we haven't seen strong numbers coming through for some of the sectors. So it's been quite mixed.
Yeah, what about the financial services industries? What about the banks there as well? Because we had a slew of them come out as well.
Yeah, the banks, well, the first 2 months of last quarter, first 2 months of this year, will probably be not so good. But I think in March, there could be some recovery because of a gradual release of liquidity by the central bank. So there could be a bit more lending. But the whole picture of what's driving lending is also quite different from the last few years. The bigger corporations are still borrowing, but the SMEs are a bit more cautious because they tend to be much more worried about the general economy, given that their balance sheet may not be as strong.
Well, when you look at the banks, I mean, the non-performing loans, there's just a tiny fraction though. There's nowhere. Should there be any concerns about that?
Well, it's always questionable
what is when it's a non-performing loan, a non-performing loan, that's what you call it.
And all the restructuring that could be going on with the loans, and so there's still a lot of unknown. But to us, I mean, longer term, we're still concerned about the Chinese banks. Yeah.
You may be cautious here, but there is a lot of monetary easing in the pipeline, or potential monetary easing in the pipeline. They've got a lot of steps they can take, Chinese authorities, and surely they should be supportive when it comes to the equity market, or is a lot of this already priced in?
I think the concern is not so much about supporting the equity market. It's more of, for the Chinese government, it's more of listening to the civilians, listening to the people on the ground.
No, I appreciate that, but it has the corollary of affecting and helping the equity market. That's the thing.
Well, they can do that, but I mean, after what happened in the last few years with the big burst of liquidity into the system after the Lehman crisis, after the global financial crisis, I mean, we are still suffering from the excess liquidity, so I don't think the government want to repeat that again. So that's the main concern, that whether they will come to help.
Okay, Nicholas, your views here as well. I know you're not a forex guy particularly, but you have to look at it when you're making your asset allocation decisions. The yuan having its highest fix since 2005. Now, what do you make of that?
Well, I think we don't really look at the FX, actually, to be frank with you. It's likely to be, I mean, people talk about appreciation, but and this is the year where maybe there could be a chance of even a slight depreciation.
Because widening the band is that message, hasn't it?
Yeah, so the message is not that it's not a straight line all the time going up, and it could be the opposite direction this year. So that in a way could also help to boost the exports to a certain extent. So that is something that could happen. So it's not always as before. The trend may change.
Yeah. Nicholas, thank you so much for your time. yuan 28 is what the fix was today.
Okay.
Thank you very much indeed. Nicholas Yeo is from Aberdeen Asset Management.